my background, many of you might not be knowing, some of you might be knowing me, isn't it? So some of you who don't know me, those who are watching on YouTube also. See, my name is Vishal Mantri. I am holding this BFM classes since almost how many years now? 10, 12 years. Okay. You have this BFM subject is from 2014. Yeah, 14 it is there. Earlier also it was there. It was with the name risk management. Earlier CAIIB had a risk management subject. So same, but topic was same. So I worked in all these departments. Actually, I worked in corporate finance. I worked in trade finance. I worked in treasury, and I worked in retail banking. All the four I have worked. That also at a senior level. So I've gone through all these subjects day in and day out. So I'll be giving you practical examples also. Okay, today only you'll see. Once we start moving ahead, you'll see what are the practical examples. Okay. So let's move ahead now. How many numericals are there and why BFM is tough? BFM is tough because you have around 30 to 40 marks numericals, case studies. 30 to 40 marks, case studies you have, case studies, 5 marks each. So roughly you will be having around 6 to 8 case studies, depending on your luck. Sometimes, but minimum 6 are there. 6 to 8. Okay? So those many case studies you can have. Numericals, if you say, numericals will be for around 35 to 40 marks. Only numericals. Plain numericals, 35 to 40 marks. Out of this, 25 marks would be on case studies, 25 marks, 5 marks each. Numerical case studies you will be having, 25 marks. And remaining around 15 marks, 15 marks will be for 1 mark, single marks. Okay? So that's why, and there are now subjective questions asked. Those are also numericals only. They generally don't ask you any theory subject in subjective. What do you mean by subjective? Say the subjective. Subjective means no answer is given to you. Only what you have to do is you have to read the question and give your answer. There is no objective, there is no this ABCD option given to you. Okay? So those are also numericals nowadays. So numericals around 30 to 40 marks roughly. So let's move ahead now. Okay? In this. What should you do? See, all these things I have given. Create study schedule. You have to create your schedule. Eat healthy. Very important part. Eat healthy, and one more is there. Sleep. Where is it? Rest. Manage your stress. See this. See, always remember, studies and everything will happen, but health is wealth. Okay? Keep this very basic in your mind. If you are able to study properly, and if you are able to sleep properly, eat properly, then only you will be healthy for your exam. Okay? Don't just stress too much yourself and go for the exams. Otherwise, what happens? You'll study a lot, and at the exam time you'll have fever or something like this. Don't do that. Eat healthy, have a sound sleep, maintain calm, cool and calm. Okay? Stress. Right? Try to avoid the stress as much as possible. Revise effectively as much as possible. Try to revise. Without revision, nothing can be done. These videos also which we will be taking in the classes which we will be taking. So in that also, you can definitely go through those videos twice, thrice, as much as possible. You can not immediately, you can go it on the Sundays. You can go through it on some holidays during the exam times. Okay? Take the breaks as much as possible. Not too many, but whenever you get stressed, take the break. Okay? Organize your study space. Now, what do you mean by organize? It's not that keep everything neat, tidy, something like this. I'll say simple line. The simple line is keep all your notes and study materials at one place. That's what I would suggest. I would suggest you keep it neat, keep it tidy. That is up to you to look out. Important part is keep all your notes, all your books, all your laptops at the place where you want. Okay, so that in one hand only you must get everything, isn't it? Ask for the help. Ask for the help with the colleagues. At Adda 24/7 we have Telegram channels. You have joined the batches. So Telegram channels are there. Plus you have AI assistant, artificial intelligence assistant. Nowadays, everything everywhere is available, isn't it? Even at Adda we have AI assistant. Avoid distractions, very important. How to avoid distractions? Distractions means what? In your bank only, check in your bank. Whenever you are working the bank, roughly 2 times tea break, roughly 1 time lunch break, right? 2 times tea break, 1 time lunch break, plus something in between. So these are called as distractions. Try to avoid them for next 3-4 months, up to June only. After June, you have your own freedom. You'll be living with 2 increments, isn't it? So enjoy with 2 increments, isn't it? For 4 months, take a bit break from all these. Okay. Practice old exams. We have test papers over here. See, old papers are not available anywhere on any website. Nowhere it's available. Kindly note. IIBF will never ever publish the old papers. All what we have done is recollected. We have collected it from the students who are our earlier students, like you only. Okay? So we have got the questions from them. Accordingly, we have created our own tests. 10 tests are available, 10 tests per subject. Go for it. Okay? Manage your stress. Already that's discussed. Now look at this. What are the types of questions you will be getting in BFM? Which are the types of questions you will be getting? See, numericals you will be getting, theory you will be getting, case studies you will be getting, 1 mark questions you will be getting, questions without options, that also you will be getting. Okay. Now if you look at all these, I'll just give you how they are related to each other. These numericals can be in the form of 1 mark also. They can be in the form of case studies also. Anything, both of them. Similarly, theory. Theory can be in the form of 1 mark also. It can be in the form of case studies also. Numericals can be in the form of this subjective also. Okay? Because these subjective questions, these are numericals. Questions without options. They will never give you theory in this. They'll only give you options. Means questions without options, and that also numerical only. They'll give you only numericals. Okay? So these are the types of questions you are having. So mainly remember 1 mark, case study and subjective without options. These 3 are the types of questions. And they are based on all the 2. Numericals also, theory also. Okay? Then, we at Adda 24/7, as you have joined the classes, what will you get in the classes? See, firstly, live classes, recorded sessions for the same, ebooks are available, okay, tests are available, and if you have joined the Mahapack, you will be getting increment Mahapack. You will be getting physical question bank at your home, delivered at your home. Plus, you will be getting formula bank for each subject delivered at your home. Subject to you have joined the increment Mahapack. Okay. So in classes, you will be getting all these things, live classes, ebooks, tests. That's enough. Okay. Also, handouts we will be giving at the time of in the classes. I myself will be giving you BFM PDF handout, I will say, because that I have prepared. Okay, I have personally gone through your book and scanned your complete book and prepared the important notes. Okay, so I'll be giving that also to you in the paid classes, and mind it, almost 90% of the paper comes from that only, plus the classes, 2 things. Okay, so you only follow that. Okay. The subject has been divided into 4 modules: international banking, risk management, treasury, and balance sheet. I have discussed about this, but now I'll discuss you one point more, which I have not discussed. Module C and Module D are totally dependent on Module B. Module C and Module D are totally dependent on Module B. If you understand Module B properly, Module C and D will be very easy for you, very easy. But if you don't understand Module B, then it becomes tough for you. So pay attention to module B very carefully, because this is one of the most difficult and most on which all the remaining topics are dependent. Okay. So next and biggest, see this module A and B are the biggest ones. You'll see in the chapters also. Chapters are also heavy. 1 and 2, A and B. Too many chapters. C and D, very few chapters. Let's see one by one. All those who are watching on YouTube, kindly subscribe to the channel. Okay? JAIIB CAIIB English Medium. Subscribe to the channel immediately, right now only. Okay? Click on the bell icon. Module A. This already, see, we won't be covering it right now. Mainly we'll be discussing module B, C, D today. Okay? A will be covering it later at the end. Once this is over, then there will be a repetition. At that time, A will be covered. But I'll just discuss the chapters which are there. Those who are there in the earlier batch, no problem for them. You already know this. Exchange rates and forex business, we have covered this part in the earlier batch. LRS, liberalized remittance scheme, and other remittance facilities for residents. Correspondent banking and NRI accounts, documentary LCs, facilities for exporters and importers. Now, if you look at these 5, only one chapter is numericals, chapter number 1. All numericals are in the first chapter only. Remaining chapters, no numerical. Literally no numerical. First chapter, all the numericals are over there only. And these are the tough ones. Then 6, 7, 8, 9, 10. So 10 chapters are there totally in module A. External commercial borrowing and foreign investment in India. Risk in foreign trade, role of ECGC. So here you will be finding the role of ECGC, Export Credit Guarantee Corporation, for export and basically export business. Okay, it's an insurance company of the government. Role of Exim Bank, RBI, Exchange Control, FEMA, FEDI, all these. Okay. These are all theory parts. IFSC, International Financial Services Center, means GIFT City in Gujarat. And then technology, tech. So module A is having 10 chapters. Module B, it is having 8 chapters. Now you see module B, this is what we will be starting tomorrow. Risk and basic risk management framework. So all the risk related topics. Every chapter you will find risk. Okay. Risk in banking business, risk regulation in banking industry. This 13th chapter is the most biggest chapter in entire BFM or even complete CAIIB you can call it. This is the most biggest chapter in risk regulation and most toughest and has maximum marks. This chapter has around, I'll tell you, single chapter has around 25 to 30 marks. Single chapter. Single chapter has 25 to 30 roughly. This is so big. Okay. Then market risk, credit risk, and one more is there, ops risk. See this, market, credit and ops operations. Okay. Then liquidity risk management. Liquidity means daily cash management. How do you manage your regular money flow? That is liquidity. Then you have Basel III framework. Here you will be having all the 3 pillars of Basel, all the 4 ratios of Basel, everything. This is module B is really tough. Then you come to module C. Module C is okay type. See, only these many chapters, 19 to 25. Okay, and easy, not that tough. Introduction to treasury management means role of treasury. Then treasury products. What are the various products of treasury? Treasury products means what does treasury deal in? Treasury deals in various forward products, means derivative products. You can call it swaps, you can call it forwards, you can call it FRA, you can call it synthetic forwards. Those are also there. So treasury deals in basically anything related to investments and the risk part of the business. Treasury deals in that. Treasury products. Now, three chapters are related over here: 20, 21, and 24. Treasury products, international equity and debt products, and derivative products. These three are related to each other. Okay. So treasury products means what does treasury deal in? Treasury deals in, as I told you, derivatives. Plus, it deals in international this investments part. What is the role of treasury? Treasury just connects your retail and corporate banking money to the international markets. So it is basically the link. Okay. International equity and debt products. So how do you invest abroad? What are the rules and regulations? That also you'll be studying. You'll be studying LRS again over here, Liberalized Remittance Scheme. So international equity and debt products. Then you have funding and regulatory aspects. Now funding and regulatory means what are the gaps? What are the, you can say, buckets of RBI? Buckets of RBI means RBI focuses on your asset and liability management in the bank. Right from overnight, means today night to it goes to 10 years. So RBI says that you must always balance your assets and liabilities. Always. There should never be any gap. Okay. Then treasury risk management. Risk. What are the various aspects of risks? What is market risk? What is credit risk? What is operations risk? Again, you will be studying it over here. What is liquidity risk? What is reputational risk? What is strategic risk? These all will be studying. Derivative products. Again, as I told you, related products. Derivative means all the four derivatives which I told you. Forward, futures, okay, options, FRA, swaps, all of these. You will be studying in details, all of them. Treasury and ALM. What is the role of asset liability management? And what is the role of treasury in it? How does treasury manage that asset liability? Means again, bucket systems. But RBI's bucket system starting from overnight to 10 years. Okay. Then module D. Module D also has 4, 5, 6 chapters. Okay. Module D is easy type, not that tough. Module D is having mostly theory. Okay. See, one thing you note, numericals can be derived from all the 4 modules. There can be a numerical over here also. There can be a numerical in C also, in B also, in A also. In the full module, it is there. Okay. In module A, you have only in chapter number 1, but remaining 3, you can have numericals anywhere. So, what are the chapters? See this, components of assets and liabilities in bank's balance sheet. What do you mean by asset? What do you mean by liability? Asset doesn't mean only loans. We always feel that asset means loans and liability means deposits, but it can be something else also. Asset means investments also. Liability means short-term borrowings also. It's not only deposits. We feel liability means deposit. It can be your short-term borrowings from the banks. That can also be a liability part. Capital adequacy Basel norms. Okay, what are the various Basel norms? Again, repetition. Earlier you had Basel 3, na? Repetition. That. Asset classification and provisioning norms. Okay, what are the various asset classifications? In the sense, what is substandard loan? What is doubtful 1, doubtful 2? What is loss? All that. And provisioning. What is the provisioning for standard loan? That is also there. Plus you have risk weights over here. Okay. Then liquidity management. Again, this is a repetition from your module B. Module B, you have one chapter. Chapter number 17th. So same is repeated over here. Somewhat. Not fully, somewhat. Additional part is also there. Interest rate fund management. Interest rate. How to manage the interest rates? Means, what do you mean by interest rate? Interest rate management means not only related to your loans and deposits. Interest rate doesn't mean only related to your loans and deposits. Interest rate will directly affect your inflation, your growth GDP. So if you don't manage your interest rate properly, or RBI doesn't manage interest rate properly, then what happens? The entire country goes in a problem. So that's why the interest rates, means repo rates basically, they have to be managed very properly. Accordingly, banks also have to manage their loans and deposit interest rates. Otherwise, the bond prices will fluctuate like anything. RAROC and profit planning. What is RAROC? Risk adjusted return on capital. Last chapter. Small chapter, very small chapter. But there's one numerical which is asked. That also for 1 mark and remaining theory. So this was about overall portion of your BFM. Now let me show you some numericals or some questions which you might find. Which you might be wondering, why this sir is saying very tough, very tough. What is so tough in this? We have seen the complete portion. All the chapters we have seen. What is tough in that? See the first question and then think. See the first question. A bank holds a stock of company A and wants to protect the downside risk on it. So it should do what? Take a long position in the stock futures. Sell a short position in the stock futures. Purchase a call position, call option in the stock. Buy a put option. See, suppose imagine this question comes to you. Okay? And this will not be given to you. This part will not be given to you. Okay? This will be given to you, and only this tick mark I have done, it won't be given to you. So this and this much only. And now you'll have to answer. Imagine. Suppose if you don't know anything, then what will you do? Means if you are at this level only, means you have not studied at all. Means normal thing you have studied, but such twisted questions are asked. So a bank holds a stock of company A and wants to protect the downside risk. So whenever, see, this is called as long position. Whenever you buy anything, suppose let's say you buy a flat, or you buy a plot, property, okay, or you buy a share, stock market. Why do you buy anything? Property, stock, gold. Now gold you are seeing where the gold is. Those who had purchased gold 2 years back, they are like, might be dancing now. Right? Those who had purchased 2 years back the gold, those guys might be dancing now. Because where the gold is? 2023, I still remember. 24, 23, yeah. 24 also, 53,000. Gold was at 53,000. Day for yesterday, few days back, 1,90,000, 80,000, it was gone. 3 times. So this is called as long position. When you buy and keep it with you, so that you can sell it later when the price goes up. That's called as long position. So whenever you are long on any commodity, pay attention. Whenever you are long on any commodity, it might happen that the price will go down. Suppose if tomorrow you have purchased a share, expecting that the share will go up, but the share goes down, then what will you do? You will face a loss. To cover this loss, what should you do is, whenever you are long on stock, you must immediately buy an option also. See, there are 2 things, always remember. There are always, whenever you are dealing in the treasury, see, whenever you are dealing in your own money, suppose you buy the share, it's your own money. Suppose if tomorrow you lose that money, who's going to ask you? It's your money. You will just cry for 1 day and then leave it. But whenever you are dealing with public's money, see, bank's money is not bank's money, it's always the depositor's money. So whenever you are dealing with public's money, you can't take that risk that I'll buy the bond, I'll buy the stock, and I'll just sit idle. Tomorrow if the stock goes down, then people will come and slap you, isn't it? Depositors are there, it's their money. How can you lose their money? So in that case, you have to immediately take the contra view. Contra view means opposite view. Means here you have purchased a stock, that's called as long position. Immediately take a contra view in options. Buy put option. Put option means what? Tomorrow if the stock goes down, the stock goes down, you will earn more. you will profit from it. So when the stock goes down, put option will go up. So there you will earn. So the answer will be obviously a bank holds a stock of company A and wants to protect the downside risk. So it must buy the put option. Buy the put option, isn't it? There is reverse position also allowed. Means I will sell the stock first and then buy later. That's called a short position, short, S-H-O-R-T, short. That's called a short position. That is also allowed in trading. And treasury deals in that also. Short position. Okay? So got a logic over here. Long on stock or long on commodity, you must buy a put option. Okay? Look at the second one. The main purpose of capital adequacy norms is to ensure that the bank has sufficient capital to. Means capital adequacy norms means what? Basel norms. Basel 3. Why do we have this CRAR? Why do we have this leverage ratio, LCR, NSFR? You will find many ratios over here. Why do we have this liquidity coverage ratio? Why do we have this net stable funding ratio? Provide a stable resource to absorb any losses arising from the risk in its business. Okay? Stable resource means you must have a stable funding. Okay, you must have a stable funding. Always banks should follow a stable funding model. Stable funding, that's called as NSFR, net stable funding ratio. This ratio you will be finding it. Whenever you will be studying this Basel. Okay? This CRAR means capital adequacy means CRAR. CRAR means what? 9% is the minimum CRAR. Plus 2.5% you add it as CCB, capital conservation buffer. So it becomes 11.5. This 9% is also divided into two parts. 7% for tier 1, 2% for tier 2. This 7% is also divided into two parts. 5.5 for CET1, common equity tier 1, and 81 additional tier 1 to 1.5%. Now what is all this? I won't give you today only. Otherwise you will say, sir, first day only you started. We'll do it from tomorrow. We are having the same topic. Okay? Not immediately. You will be having this later. But we'll be studying all this. Okay? So don't worry about all these things. We'll be going through it, each and every aspect. Look at this. Why BFM is tough? Look at this now. Now think of it. Who can think? Who can give me the answer? A bank borrows dollar for 3 months at 2.5% and swaps the same in INR for 3 months for deployment in CPs at 5.5%. The 3-month premium on US dollar is 0.75%. The margin generated by the bank in the transaction is, so now what do you think? How much margin will be generated by the bank in this case? Means, will the bank earn something? And if it will earn, how much will it earn? In percentage. What do you think? In percentage wise, how much will it earn? Anyone? That's why BFM becomes tough. Okay, I'll show you. Very simple one. It's not that tough. Okay, it's not at all tough. See, you are buying from one market. Simple rule is you are buying dollars at 2.5%. Okay, and then you are putting that in a CP, commercial paper. CP means you are investing it so that you will get 5.5%. Here you are getting 5.5%. Okay. Deployment in CPs, okay? So you are getting 5.5%. This much money you are giving, 2.5 you are giving, you are borrowing. Now there is a premium of 0.75%. So this premium is for what? For dollar. So premium means what? See, whenever you go for buying something, like something earlier, You used to see malls only. Go to the shopping malls. Generally on holidays, their tickets are higher. Why premium? Why? Because there is a good demand. So dollar is having a premium because it's in huge demand. So that's why 0.75%. So this you will have to pay premium, extra premium. In railway tickets, see this immediate Tatkal. What do we call? Tatkal, and there is one more super Tatkal nowadays, isn't it? In plane tickets, you buy the plane tickets, you will find it shoot up on Sundays, right? Saturday, Sundays, because premium. So this premium is charged on the dollar also. So this premium you will have to pay. 2.5% plus 0.75%. This much you will have to pay. So this much is going out. 3.25% is going out. You are giving. And how much are you earning? 5.5. So what is the difference? 5.5 minus 3.25. 2.25 you will be earning. So the amount generated by the bank is, or the difference generated by the bank is premium Tatkal. Correct, RV? Premium Tatkal. Right? So 2.25% is the margin generated by the bank. Bank will earn this much. Isn't it? So such numericals are there. Okay, one more I'll take. Case study. Very interesting one. Now see this. See, it is just to give you an idea what BFM is. Okay? Not to this. Don't get afraid because of this. Or what is this? Will we be able to cover it? No, it's very easy. Once we do start the topic, things become very easy. Okay? See this. One case study I'll show you just. I won't solve this case study. I'll just show you. One or two questions we'll see, then we'll stop. These case studies I'm taking in the YouTube channel also. See, all of you, those who are watching on YouTube also and those who are in the paid batches also, follow the YT channel. YouTube channel of JAIIB CAIIB English Medium. I do take various case studies on YouTube also. Some important questions also, freely. So follow that also. That is also part of your studies. Okay? Look at this case study. Read this. Apex Bank faces an interest rate risk. Its liabilities consist primarily of short-term, variable rate, demand deposits, while its assets are mostly long-term, fixed rate, mortgage loans. The Asset Liability Management Committee must balance this mismatch to protect the NIM, net interest margin, and enhance equity. So it has to enhance the equity also. Effective ALM, ALM means Asset Liability Management, requires controlling the mix of assets and liabilities to ensure adequate, stable earnings while managing liquidity risk. The committee intends to restructure by encouraging fixed term deposits and investing in floating rate bond deposits, bonds to improve the stability. Answer the following questions. See, what is the case? There is a bank. There is a bank, and this bank is facing a problem. What is the problem it is facing? See, its liabilities consist of short-term variable rate demand deposits. Short-term variable rate. What do you mean by short-term? CASA, current account, saving account. Short-term. Okay? And also FDs, which are less than 1 year. Those also come under the same category. All the FDs which are under 1 year come under the same category of short-term deposits. So this bank is having the deposits as short-term. See, understand this. Deposit is short-term, less than 1 year. All the deposits are less than 1 year. And these assets means investment or your loans. These are long-term. Long-term, mostly long-term fixed rate mortgage loans. So deposit is short-term, loan is long-term. This will create an imbalance. Why? Because depositor will immediately come in next year. Means after 1 year, depositor will come to you, sir, my money, give me. The loan person, borrower will say, I will pay you after 10 years because I've taken the loan for 10 years. So you'll have a mismatch. ALM, asset liability mismatch, we call it. You might be feeling that is this possible? Are banks, would the banks work in such a way that deposit short-term, long-term loans? Will the banks ever function this way? Yes, they function. Latest example, 2023. 2023, one of the biggest banks of USA. One of the biggest banks of USA. Which one? Silicon Valley Bank. Just type on Google right now. Silicon Valley Bank. Check it. Silicon Valley Bank did the same problem. It had CASA deposits and it invested in 30-year bonds. Deposit less than 1 year, asset 30 years. Gone. Bank was gone. Bank was liquidated, bankrupt. Bank was bankrupt. Okay, so such things happen. That's why we must always focus, and RBI is very cautious about it. So this thing has happened in this bank, and now the bank wants to fix it. See, effective ALM requires controlling of mixed of assets, blah blah blah, all these things. The committee intends to restructure by encouraging fixed term deposits. See, their deposits are of short term. So now the committee wants to take long term deposits so that they can match. And similarly in assets, they want floating rate bonds to improve. Okay. So this is a case study. Now there are questions on this. I'll just cover one question today. One or two. Two we'll cover and then we'll stop. Check this. In the context of bank's balance sheet, which of the following is considered as the source of funds? Treasury bills, customer savings deposits, bank premises, and commercial loans. So which one is considered as a source of deposits in this? T-bills, savings, bank premise or CL, commercial loan. So it is savings. Deposits are a source of funds, isn't it? So savings. Second one. What is the primary risk identified in the case study due to the maturity mismatch? Which is the primary risk which is identified? Means which is the main risk in the whole problem? Operations, credit, interest rate, and reputation. It is basically, yes, the answer is over here. Correct. The answer is C, not B. Answer is C. Credit risk means what? See, credit risk is different. Credit risk means what? Credit risk means the other party will not pay you. That's also called as counterparty risk, or it's called as country risk. But here the problem is interest rates and the mismatch, balance, asset and liability mismatch. So that will be handled by interest rate risk. Okay, C is the answer. What is the ultimate objective of asset liability management? What is the objective of ALM? To maximize short-term profits, to eliminate all the risks, to generate stable earnings, to reduce number of employees. So, what is the ultimate objective of any treasury or ALM? What is the ultimate objective of any ALM, asset liability management? Is it B? What do you say? Is it we want to eliminate the risks? What do you think? Is it B? To eliminate all the risks, isn't it? So that is not the answer. Answer is C. See, you cannot eliminate the risk in business. Kindly note. No treasury in the world can eliminate all the risks. No treasury. Even if you think, it's not possible. Okay? So that's why this is not possible. So you can build a stable source. That's only what you can do. Stable source and build equity. So these are the three questions which I wanted to cover. Two more are there, but that will cover later. In the YT series, you can follow. Those who are watching on YouTube, kindly join the Adda 24/7 classes ASAP. How to join? For joining the Adda classes, kindly download the app first. You have to first download the app. Okay? After downloading the app, you will be getting 1% extra discount. Plus, you can join the batches. See this. Officers Pro batch. This is a batch we are talking of. Okay? Officers Pro batch of CAIIB. Join this batch. E-books, mock test, online live classes, recorded sessions, all the things you are getting. Okay? Everything you are getting. E-books and mock tests. Mock tests are 10 mock tests per chapter. 10 per subject. Per subject 10 mock tests, full length. And chapter-wise mock tests are separate. Similarly, e-books. Chapter-wise e-books are there. The mock tests are same as that of your final exam. And always remember the code should be, for maximum discount, you must remember this code Y432. Y432. Okay? You will be getting 81% discount plus 1% extra by downloading the app. 82% discount. If you join the Mahapack, see, Mahapack is one of the best Mahapacks for you. If you join the Mahapack over here, CAIIB Increment Mahapack, see this one. This Increment Mahapack will give you triple validity offer. Means you buy for 5 months, you get it for 15 months. Buy for 9 months, you get it for 27 months. Again, 82% discount is there. Plus, physical question bank you will be getting at your home. Physical formula bank you will be getting at your home. E-books, mock test, 15 plus lectures, 15 plus batches per subject. Per subject, 15 plus. You will be having electives also in this. So join this ASAP. And let's meet tomorrow. Okay? Chalo, bye everyone. Hope so you have enjoyed it. All of you enjoyed the class. Type yes in the comment section. All those who are watching on YouTube, kindly type yes if you have enjoyed the class and if you found it interesting. Okay? Bye everyone.